In order for you to succeed as a trader, you have to master being patient, disciplined, and be calm, cool, and collective while under pressure. So, I want to start this chapter off by showing you some very common emotions that you'll most likely experience and how they might cause you to be impatient and undisciplined, which affects your decision making. So, if you're ready, let's get started. All of the technical strategies and risk management techniques will most likely be the easiest part to learn, but the psychology aspect is where the real challenge is going to be, and unfortunately, it's where most people fail. The reason is because we have such a strong tie to money that it can cause us to do some irrational things very easily, which can cause us to break our rules and experience significant losses. And sometimes it takes almost every fiber in our being not to give in to the temptation of breaking our rules, which is very hard to do. It doesn't matter how good your strategy is or how well you manage risk. If you cannot control yourself and stick to a predetermined set of rules, then you're not going to find success. So that is why it's crucial to understand the psychological aspect of trading. Because if you can know what emotions you're going to go through and how they might impact your trading, you can hopefully recognize when you start feeling these emotions and not let them control your decision making. The first emotion, and probably the most common, is fear. In trading, we are always facing the potential of losing money, and the uncertainty about future price movement can increase one's fear. Traders driven by fear often hesitate at making the correct decision on time, panic if they see their position go in the red. They sell winning trades too early in fear of losing what they've already gained, ignore stop loss levels in fear of taking a loss, or they might become overly cautious, avoiding potential opportunities in fear of making a mistake. I would say the majority of your mistakes are going to come from fear. So it's important to get over being fearful and look at the market with a completely different mindset, which I'll be showing you how to do in a later lesson. The next common emotion traders experience is greed. Greed is an intense desire for more, which is associated with higher profits. So greed might influence you to hold winning positions too long, foregoing opportunities to lock in profit. It might influence you to overtrade in pursuit of increased profits, or it might cause you to oversize your positions and take on more risk in pursuit of higher rewards. It's very important not to be greedy and stick to a solid plan that will give you realistic returns and minimize risk. Another common emotion is excitement. Placing bets on stocks can be inherently thrilling, and it can cause an adrenaline rush, especially when you win on a trade, which can put you in a state of euphoria. And this excitement can be quite addictive, which can often influence you to place trades that aren't even part of your overall strategy just for the sake of experiencing that exciting feeling and having the chance to make money no matter how big or small the odds are. I believe that if you approach the market with the mindset that values discipline and patience instead of thrill seeking, then you'll have a much better chance of success. Another common emotion is impatience. Now, this is a really big one that I think contributes to a lot of traders' failures. Impatience is the inability to tolerate delays or uncertainties. If you are impatient, it might cause you to not adhere to your trading plans or rules. You might find it challenging to wait on the sidelines for those high probability setups. You might do things like overtrade, seeking constant action, or jump into trades too early without waiting for confirmation, sell winning trades prematurely, missing out on potential profits. You might trade low odds setups to try to make up recent losses quickly, or you might mismanage your risk in a way to try to make lots of money quickly. I believe if you are impatient, then you have too much of a short-term focus, which can hinder your long-term performance. So try focusing more on your long-term goals and understand that trading is a marathon, not a sprint. Another emotion that you're going to feel is regret. Regret is the distress felt after realizing that a different decision might have produced a better outcome. As a trader, you'll always feel regret in some way or another, whether it be for missed opportunities or trading losses. I want you to understand that it is impossible to be perfect. And if you're always trying to seek perfection, then you're always going to have regret. And regret can lead to things like revenge trading, where you're trying to recover losses or missed profits. Hesitation, where you might miss opportunities because you're paralyzed by the fear of regretting a decision later. Or it might cause you to abandon or loosen your rules to try to seek perfection, which will cause you to never be consistent with a strategy, which will ultimately lead to failure. To mitigate the impact of regret, I believe traders should develop a more disciplined and systematic approach. Try focusing on how well you executed your trading strategies and rules instead of what you coulda, woulda, shoulda done. If you followed your rules perfectly, then you should be satisfied no matter what the outcome ends up being. And if you make mistakes, learn from them. Don't dwell on them. At some point or another, you'll most likely experience all of these emotions and more, but some might influence you more than others. Everyone experiences emotion differently, so it's important to recognize what emotions you struggle with the most and learn how to overcome their potential impact on your trading. Hope you all learned something, and I'd like to thank you so much for watching.